This is the June 11 edition of Commodity Week.
Todd Gleason services are made available to WILL by University of Illinois Extension.
Well, welcome to Commodity Week. I am Todd Gleason. Our panelists for the day are Matt Darragh. He is with Kipler. That's in Birmingham, or at least he is in Birmingham, the United Kingdom. Ellen Dearden is here from Ag Review in Morton, Illinois, and Ted Seifried joins us from Zaner Ag Hedge out of Chicago, Illinois. Commodity Week is a production of Illinois Public Media. It is public radio with the farming world, online, on demand at willag.org. Our theme music is written, performed, produced, and courtesy of Logan County, Illinois farmer Tim Gleason. Now, let's turn our attention to the marketplace. We'll get a list of items that maybe we should discuss for the day. I think I'd like to start with you, Ellen Dearden, in Morton, Illinois at Ag Review. What's on your list?
On my list is if you're living in central Illinois and you're a farmer, you're worrying about how much rain we've gotten all at once and whether there was wind damage to any standing wheat. And if you are in some other areas like the South Dakota and northern part of Nebraska, you're still worrying about not having enough moisture to get a crop up and going. So I think we need to consider that the U.S. Midwest looks very different from one area to another.
Ted Seifried from Zaner Ag Hedge on your list?
Yeah, well, first of all, Ellen's got some great points about weather and the drought monitor and, too wet versus too dry in some areas. So I'd love that conversation. Also, we had a USDA WASDE report today. And while the June report is not usually much of a big deal, and this one, really wasn't different from that, there were some subtle changes here that I think we should look into a little bit too.
And finally, Matt Darragh in the United Kingdom. Tell me about your list.
Hey, yeah, so as well as the WASDE and weather across the Midwest, it'd be great to just look at how we're seeing fertilizer trade move out of the Strait of Hormuz. So at Kepler, we're a leading provider of global physical seaborne trade. So we have great access and visibility of what's moving, how the ships are moving around that within the Middle East Gulf and out into the Gulf of Oman. So it'd be great to share some insights to what we're seeing now.
Okay, great. Well, we will come back to that fertilizer trade, I know, particularly once it is loosened up and if we get those ships beginning to move, how long actually it might take them to transit and what that really means. But let's start with the WASDE, Ted. USDA releasing numbers in June. Earlier on Thursday, as you said, not many changes, though there were some, I think, that meant a great deal to the corn market in particular. Did those come out of the global side of the WASDE figures as opposed to the domestic USDA numbers, United States numbers, I mean?
Yeah, I think the ones that mattered at the end of the day came from the global numbers and in particular the South American production numbers. But I do think there were some interesting changes on the domestic balance sheets, even though ending stocks numbers didn't really change. You can say corn changed because it changed 3 million bushels based on imports. But in both corn and soybeans, there was some flip-flopping in the demand categories. And I think that is interesting. And it gives us maybe some insight into not only the end of this marketing year, but maybe into the next marketing year. What I'm talking about there is for corn, they lowered ethanol. As I think they should have, but maybe they might need to do it even further before the end of the marketing year. But the lower ethanol number was offset by a higher export number, which, again, I think that was fairly justified, especially at these now lower prices that we have. For soybeans, they increased the crush, as I think was justified, and lowered exports. So another flip-flop in the domestic balance sheet there and leaving ending stocks unchanged. I think that gets missed by a lot of the market followers because they just look at the ending stocks by themselves. I think when we look into the individual changes, it gives you an idea of what the trend might be between now and the end of the marketing year and into the new crop marketing year as well. But to your point, the surprise numbers or the numbers that had the biggest impact on the trade today were the South American numbers. And the USDA raised the Argentinian corn crop by a fairly significant amount, 2 million metric tons. They went from 59 million metric tons to 61 million metric tons. That was it's a number that has been echoed by some of the South American reporting agencies. It's not the highest number that we've seen, but 61 has been talked about a lot. So it's good to see that the USDA is finally sort of agreeing with a lot of Argentina's own analysts or reporting agencies. But the surprise was Brazil. They increased Brazil's corn crop production by 3 million metric tons. The trade was only looking for a very slight increase there. And when you put the two together, that's an extra 5 million metric tons of corn that's in the world. Argentina in particular, I think, is the concerning one because, wow, that crop is now 12 million metric tons higher than it was last year. And Argentina is the one that's going to compete with us more on the global export stage. And while the USDA did not adjust our new crop exports lower yet, I think that's a bit of a red flag for us to watch for, or maybe be concerned about, that if we were to see our new crop exports slow down a little bit, or not keep the pace that we've had during this marketing year, well, part of that reason or rationale might be because of the extra corn to be exported from Argentina.
Ellen Dearden, I'd like you to follow up, particularly as you look at the charts in the trade for corn, maybe wheat as well, and think about what those numbers meant to you today and what it means for producers in Illinois, Iowa, Indiana, across the Midwest.
Just to kind of double back first on Ted's comment about USDA lowering the corn use for ethanol and raising the export number on corn. I notice in the Peoria Pekin market, which is a river market on the Illinois River, we have seen the ethanol basis drop and we've seen the river basis increase, so that the flat price or the basis comparison right in this area, this little area, favors the export business. And that's very much out of sync with the typical midsummer time period. Looking at the charts, we really had kind of an ugly day in the corn market on Thursday, and we've had a pretty ugly deal going on for quite a long time. December corn fell well under that 462 February insurance price during this break, and we're now down and took out last late summer, mid-August low on the December corn futures at 440. And that just is kind of a rocky boat. That had been hoped for solid support, never going to go under it again in this calendar year, and we did it rather easily. Funds are still covering long positions in the corn, still covering longs in the wheat, but I think they remain along the bean side of things and haven't been quite so aggressive this week in covering those long futures. But this 440 level, now 460 area, or just slightly lower than that's going to be a lot of resistance in this new crop corn. On the wheat side, we kind of rolled over from a seasonal standpoint and are heading lower. We did take nearby July Chicago wheat up above $6 very briefly on Wednesday, but we certainly couldn't hold there. And we're sitting down almost 15 cents below that. It's going to be a tough go, I think, on wheat as we get into the soft red winter wheat harvest, even if the hard red winter wheat harvest looks pretty puny.
Matt Darragh, from your perspective in Europe, when you see a 50-cent change in the season's average cash price for wheat in the United States, which is what USDA's World Agricultural Outlook Board presented today, from $6.50 to $6, what does that tell you about the global marketplace, or what does that tell you that you need to know?
Yeah, it's a pretty sizable movement for sure. And of course, like when we're looking at the European market, we tend to keep an eye on how Matif, that's the French milling wheat contract, is moving as well. And those two contracts haven't necessarily been moving in perfect correlation recently, due to obviously the varied conditions that we've seen across France, and then also what we've seen in the US too. But we have seen that pressure. I mean, we saw a lot of selling off with the US wheat contracts, and we're also seeing that sell-off pressure in the French wheat contracts too. So that pressure is being seen on the other side of the Atlantic. And I think it's just in light of that strong carryover stock that we're seeing. And if I may add a little bit of sort of additional context on what we've been looking at the WASDE report too, is that we are sort of looking at sort of that carryover stock for 25-26, which obviously is leading on to that sort of pressure on the market. And, you know, some of the revisions in the 25-26 across those major exporters that we saw in the June WASDE report were a little bit interesting. The two that I like to pick up is the revision to the EU wheat export campaign and the Russian wheat export campaign. So for Russia, we saw exports increase from 46 to 48 million tons. And then also for the EU, we saw it increase from 0.5 million tons. Now, obviously, this is both common wheat and durum wheat, sorry. So we're looking at both of those kind of different grades. But, you know, we're sort of almost midway through June now. So we have a really relatively good idea as to how those campaigns are wrapping up. And it seems interesting that they increased those kind of, increased the estimates for either of those export campaigns. You know, year to date, we've got Russia wheat at around 40, or year to date, so that's July to May, we're about 43 million tons for Russian wheat exports. And given current monthly pace, for us, it just doesn't seem too likely to see another 5 million tons into June, given current monthly export pace. So we are, and then also for the EU, you know, if we compare our numbers and also looking at what the European Commission numbers are producing as well, I think the European Commission are about 28 million tons for the 25-26 wheat export campaign. With the USDA WASDE report at 31 million tons, it just kind of, I do wonder whether the June WASDE report is reflecting sort of somewhat lighter ending stocks for the 25-26 marketing year than perhaps we should see later on. Maybe when we see kind of once customs data confirms June export figures for either of those export destinations, maybe we'll have a little bit of a heavier carryover stock, which will obviously impact the weight of the 26-27 supply. So that's one thing we're noticing. But of course, that pressure that we're seeing in the US market is spilling over into the EU. Of course, they do have varied key kind of export destinations. So that pressure that we see, you know, with the likes of the US export campaign, typically sort of Central, South American, but also obviously filtering across the Pacific into Southeast Asia. That does kind of impact, but it'd be more of an indirect impact that we would see. The EU or Europe as a whole is having its own kind of fierce export competition at the moment. We've got seriously high stocks in Ukraine due to logistical challenges, which they will have to carry over into next marketing year. So we're going to see continued competitiveness across the EU too. I mean, you know, if we look back where we were 12 months ago, the competitiveness of US wheat was very fierce, and we're not seeing that this year. For the reasons are obvious, but it's just a very different market, you know, where we are 12 months later in the sense of US competitiveness, and also kind of where we are with stocks across Europe too. So we're expecting to see a continuation of export competitiveness across the EU and also Black Sea. And it's also worth noting just that perhaps smaller Southern Hemisphere crop will also be a key watch point going forwards. I know they're in the midst of planting across Australia and Argentina, and you know, don't want to go down a rabbit hole here with regards to, you know, the balance in 26-27, but yeah, that's definitely another angle that we're keeping an eye on, how that could influence the Northern Hemisphere export campaign across those majors, and whether we see a little bit more Black Sea grain going to the likes of South Asia and Southeast Asia too.
Matt, do you think that the U.S. could be more competitive in wheat going forward once we kind of digest the problems that we're having with our winter wheat crop? Because even though we're talking about almost a 2 million metric ton, or I'm sorry, 200 million bushel decrease in ending stocks domestically from one year, the last marketing year that just ended 11 days ago, into next marketing year, I mean, it's still a 40% stocks to usage ratio. We still have a ton of room to see exports increase if we wanted to.
Yeah, absolutely. Yeah, I definitely think the US will still have a key role to play on the global market for sure. You know, we've got spring wheat planting obviously underway in Canada. I think one of the key kind of measures of how the US export campaign will perform is how well that Canadian spring crop looks. Obviously, they're quite competitive across the likes of Central America and South America too. So if we were to see that US export campaign be a little bit softer in those markets, then that's to the benefit of Canada. But also kind of, you touched on it as we were having initial conversations, Ted, we're facing El Nino. And I think Australia, that can impact that Australian wheat crop. And I do wonder, Australia and the US typically compete in the likes of Southeast Asia and also some of those East Asian markets too. So I wonder whether, if we do see that yield or that punishment on yield from the dry conditions across the eastern coastline of Australia, which has been seen before, caused by, influenced by the El Nino conditions, whether that does sort of support the US export campaign. But, that's kind of where ABARA is at the moment. Their recent quarterly report did acknowledge the pressure that the El Nino weather event can have on Australian wheat yield and also production and therefore exportable surplus. So I think there's a few moving parts in the sense of how production shapes up in the likes of Canada and Australia, which will be a big influence on how US exports perform at the moment. But as it stands at the moment, we don't see them nearly as competitive as they had been. In our balance sheets, we've got definitely lesser exports from the US in 26-27 as we had seen in 25-26.
Ellen Dearden.
Sorry, Todd.
No, that's okay.
If you don't mind a follow-up question to Matt.
Sure.
I mean, to your point, the USDA is somewhat reflecting the El Nino situation for Australia here today, lowering the Australian crop by 2 million metric tons from 30 million down to 28. And that compares to their crop last year, which was, let's say virtually 36 million metric tons. Do you think that's enough at 28 million? Again, a full 8 million metric tons lower than their last marketing year. Or could that go a lot lower with the El Nino conditions?
Yeah, it's a good question because it's so difficult to draw, when we go back through the Australian wheat production, you can't really use 5-year averages against yield because it's just, it tends to kind of push either one way or the other with regards to a very low yield, very low production, or it goes the other end of the spectrum. You have a plus 30 million ton crop, which becomes very impactful on the export market within sort of East Asia, Southeast Asia, South Asia, and also Sub-Saharan Africa too. We're in line with where ABARA is at the moment. We agree the yield could come close to around 2.5. We ran some quantitative analysis looking at, if you saw an El Nino index of around 1.5, which is sort of that strong El Nino, which is being forecast during that kind of October, November, December period, or maybe September, October, November period, when that Australian wheat crop is in that reproductive phase, more influential on unfavorable weather conditions and more influential on yield. We did see yield close to sort of 2.5, 2.6. So that's kind of that key influence there. So acknowledge that, it's a fair point. Yeah, the USDA have acknowledged that they factored in that ABARA's update in the report. So we think that production estimate's fair at around sort of 28 million tons. Yeah. We just think that it's a watch point at the moment, and we do think that we're not expecting to see the US quite as competitive as it had been previously. And given the sizable supply that we've seen in the Black Sea, it won't be as easy for the US to tap into sort of Southeast Asia, South Asia, due to kind of a strong competitiveness out of Russia and Ukraine. We're looking at perhaps Russian estimates around 90 million tons, if not a little bit higher. Assuming that a crop of that size is realized, and we do see somewhat softer production out of Australia, it's likely that it's not going to be an easy grab for the US to tap into those kind of subcontinents.
Yeah, that Black Sea production really gets in our way. So
massively, yes, unfortunately.
Yep.
So Ellen Dearden, taking all of that into perspective, and I think kind of the bottom line, you can all tell me for sure, is that there's just a lot of wheat around the world at the moment. It could change, but there's a lot of wheat around the world at the moment. And I'm wondering how much pressure you think, Ellen, that will have on the marketplace at this point. And then we can talk with you just a bit about the rain we've had in our part of the world.
Yes, wheat is still working lower, and we may still have another 50 cents downside move in the soft red winter wheat, and maybe 40 or 50 in the hard red winter wheat. But a lot of it, we're going to see the basis all over the place for wheat, because there'll be areas that the yields are 20 bushels to the acre in Kansas, and there's going to be guys in northeast Kansas and Zuzalo territory that have 50 bushel wheat. So it's going to be all over the place.
And as it relates to those topics you wanted to discuss, the lack of moisture out west in the Corn Belt and so much rain and wind in our part of the world, do you think that the wind will have that much and extensive of an issue? I'm wondering about that.
Well, it certainly is going to be an issue, probably not so much on wheat in central part of Illinois because you don't have that much wheat grown here. But as you go further south, where the wheat is really ready to be cut, yes, I think that wind situation will be problematic. I'm very interested in how much water we've had in the central part of the Midwest, because we went through the month of May with an inchish kind of rainfall for the entire 31 days, and we've had about 4 inches of rain this week. So that's a big have and have not. The people that have missed rain this week are really crying. A lot of those fellows in the southern part of the Dakotas and eastern part of Nebraska are really crying for rain. I don't know if you've noticed, but there's big wildfires out in the western part of the northwest portion of Nebraska this week around Fort Robinson, where just whole towns are evacuated. So it's not a big cropping area, but that little corner does grow corn and beans as well. So I think that's really problematic. I think it was also interesting. One of my clients in Oklahoma told me that during the month of March, they had rain. May, they had almost 4 inches of rain, and now here we are catching up with them.
Ellen, I want to stay with you for just a second because I know you follow the cattle market closely. What are your opinions on screwworm and its impacts?
I really don't know, Todd. It just seems to me that USDA is trying to smooth a lot of feathers with announcements on what they're going to do and what they're not going to do. But this is a parasite that affects open wounds, not, so any animal that's been ripped with barbed wire or something along that line is very susceptible should these screwworms make their way further north. And we move livestock all over the place, so we need to keep that in mind. It's not just bugs flying, but it is just heavy movement of cattle. Notice this week that Mexico has limited the amount of livestock that can move out of the U.S. South, and we've put the kibosh on cattle moving out of Mexico into the U.S. for now a year. So I don't know that there's a quick answer to any of this.
Yeah, the fly itself doesn't move very far, very fast. It is about transportation of animals, domestic and wild, both wild on their own, I suppose. But domestic animals can be moved very far, and it would behoove producers in the Midwest not to move animals from Texas northward, I would believe. So let's continue on with the conversation about the commodity markets, corn, soybeans, and wheat. Specifically, Ted, when you think about what producers need to know today, did it change very much this week for you at all?
Todd, I'm not really sure a whole lot has actually changed in the last couple of weeks while we've had this massive, massive slide. It's really been money flow driven. It's been the funds. And I've been kind of concerned for some time now that the funds had gotten really very long in grains and oil seeds for the wrong reasons, i.e., alternative energies. Sure, yes, we have ethanol for corn, we have biodiesel for soybeans. We use a portion of the balance sheet for corn and soybeans for energy, but you can't put raw corn or raw soybeans in a gas tank and make a car run. We have to have, there's a process there. We have to have the infrastructure to do that. And we can't just flip a switch and double that infrastructure overnight. It takes a lot of time and a lot of investment. And I think the funds finally realized that, these aren't actual energy contracts. These are agricultural contracts that have an energy component. And so they lost a little of their taste to be long in a big way. I mean, they had been, when you combine all the grains and oilseeds together, they had been longer than they ever have been before. So that reason kind of went away. Then it was, the whole, well, we're never going to get any fertilizer. You look at the price of urea and it's below, at the Gulf at least, it's below the price of where it was before the war started. And then it was China's going to buy 17 billion additional on top of the soybean commitments that they've made of U.S. agricultural goods and ag-related products. But that hasn't happened. So the funds, I think, have just gotten tired of chasing headlines and using the grain and oilseeds markets to do that. And so you have this mass exodus that has happened here over the last couple of weeks that continued into today. The question is will they get long for the right reason? Ellen talked a lot about weather, and you look at a drought monitor and there are a whole lot of fancy colors on that drought monitor. One of the most colorful drought monitors we've seen. But you look at the area where corn and soybeans are grown, only 27% of the corn area is under any sort of drought conditions, and only 28% of the soybean area is under drought conditions, which is why we have crop conditions that are actually all right. They're a little bit below our 5-year average, but they're all right. And with all the rain that's moving through northern Illinois and southern Wisconsin and Indiana, some of those areas are going to get taken off that drought monitor, I think, for next week. So, the question is really, is there a weather reason for the funds to get long or not? Or, and I think the biggest question, is China going to live up to that commitment, that 17 billion of U.S. ag products, aside from the soybean commitments that they already made? Because that would mean a whole lot of corn, a whole lot of sorghum, a whole lot of wheat, a lot of things. And if we start to get the feeling that they are doing that, that completely changes the game in these markets. But for the moment, it's just been disappointment for the lack of any sort of indication that they're doing that. We haven't seen them really buy anything of note to make us feel like they are going to live up to that commitment.
Matt, Darragh, from your perspective, will China be in the marketplace to purchase U.S. commodities?
Yeah, it's interesting to see. You really thought, we had conversations with clients who were sort of asking us very similar questions. Because we saw obviously what happened in back end of October last year. China came in, said they would agree to buy soybeans, and there was a bit of a delay, but soon enough we began to see that activity in the market within the next few weeks. And what's interesting is there's been this kind of, we've had a shake of hands supposedly, and we were expecting to see these sales arrive, and it's been very quiet. And I think, in our balance sheets, we are expecting to see some US exports to China. And if we talk about soybeans, we're not expecting to see that 25 million tons be realized in 26, 27. We're sort of closer to half that volume, unfortunately, with the US balance sheet.
Oh my.
Yeah, we are. But it's just because the supply that we have from South America is just so strong.
Yeah.
I mean, there's a consecutive record crop from Brazil, Argentina. I mean, I appreciate they're more on the crushing game, but they still have a good supply that they can use for like the exports of the actual beans themselves too. So we still got Q4 2026. We've still a good amount of supply in Brazil, and I think although it's a very different political, at the moment it's looking very different from a political point of view, year on year for Q4. The supply's still there, and we saw what Brazil was able to achieve in 2025 Q4. And there's nothing to suggest that they can't do that again, if not a little bit stronger, given they produced maybe 8 million tons more beans.
Matt, I can't disagree with you. I mean, the supply is in Brazil, and from a dollars and cents perspective, it makes a lot of sense that they would prefer South American soybeans. But if they're politically motivated, if they're trying to win favor with the administration or whatever, then they're going to do it. But I don't know.
Yeah.
Politics change with the wind here.
It's definitely
one tweet to the next, sure. By the way.
Yeah, yeah, definitely. I think it's so challenging, and I think that's what the hesitancy has been. We've had meetings before where certain agreements have been made, or supposedly certain agreements have been made, and then you haven't seen the activity. I mean, there was rumors of perhaps an additional, once they reach the 12 million ton purchase agreement, there was rumors about getting an additional 8 million tons of Chinese demand for the 25-26 marketing year of soybean demand. And that doesn't appear to have materialized really. And I think that kind of delay, that hesitancy there is factoring to market. And I think, if you're trading beans, you're a little bit more cautious when you're making those kind of trade executions, because sometimes it doesn't materialize the way that it's supposedly has been said. And I think, we've also got another meeting between the US. I believe, as it stands at the moment, there's meant to be a meeting between the US and China in September. And I think that, in our opinion, we're not expecting to see much activity between Chinese sales of US agriculture goods up until then.
So where is your U.S. domestic balance sheet if you have only half of those 25 million?
It's looking a little bit heavy. Yeah.
Yeah. Do you care to share what that number might be?
I'd need to double check the balance sheets, but it's looking a bit heavy. I mean, the challenge is that we obviously are a little bit more optimistic on crush. We're at what,
Sure.
2.650 for 25-26. Now we're at 2.77 at the moment, we're at 2.77 for 26-27. So, we're expecting
that's 20 million bushels over the USDA. That doesn't account, or that doesn't offset.
Yeah.
12.5 million metric tons.
Yeah, it's still leaving a bit of a hole. But that's the thing. I mean, we don't, this isn't to say, our balance sheets aren't fixed in stone. We won't leave them for 12 months and then adjust them accordingly. It's just under current fundamentals and at current prices. If we look at FOB offers coming out of Brazil, perhaps more so for the near term as opposed to looking to new crop US soybeans. We've still got.
You would expect that if we only do 12.5 million metric tons to China, that the rest of the world business would pick up some of that. But
that's the angle there. I mean, there is a little bit of inelastic demand. Some crushers, like for example, perhaps Egypt, might want to pick up US beans due to quality. So there's a little bit of a demand there that the US can rely upon. But it goes without saying, it'll be a huge miss if they can't pick it up. And I think the challenge in the US bean market at the moment is that it's somewhat pricing in anticipation of Chinese demand.
Mm-hmm.
And
the USDA obviously has that factored into their balance sheet, right? I mean,
massively. I mean, what we saw in.
Well, they have the 25 million metric tons.
Well, USDA goes by policy in place, and they are instructed that is the policy in place. So it has to be part of their balance sheet right now.
Yeah, the 25 million metric tons. Nothing else is written down as a policy anywhere. I'm not even sure the 25 is actually.
Yeah, we never signed that deal, did we?
The pricing is very different as well. I mean, if we look at how the US was pricing to Brazil back in the back end of October, we saw US beans at a huge discount to Brazil because they were just trying to tap into every other market other than China to at least come out with a balance sheet that's at least a little bit tighter than it could have been without Chinese demand. So when China came in and said, we're going to buy some US soybeans, you had US beans pricing very competitively on the export market, albeit with a little bit of a different tariff to likes of Brazilian or South American beans. But when they've come in and stepped in and made an agreement now, you've got US beans at a premium to Brazil. So US beans aren't quite as attractive on the global kind of FOB market as they had been back in October. So it goes to your point that it's we do think there's political motivation there, and obviously as much as China has supposedly committed to these purchases, the US will also have some things to uphold on their end too. So if they don't really uphold their end of the deal, China doesn't necessarily need to get these US beans if they don't have to. So the US has to play ball as well.
Yeah, Todd, I'm really sorry to be hijacking the conversation, but Matt, I think we have some sales on the books to China in the form of unknown destinations that happened in the last 2 weeks for new crop, because the 132,000 metric tons or derivations of that, we had a 264,000 metric ton on June 8th. Those are very China specific numbers generally. So I think they are buying, but to your point of dollars versus cents versus political, or dollars and cents versus political, if it were political, I think they would be outwardly stating they'd want it known that it was China making these purchases. If they're doing it for concerns about El Nino and the following crop and so on and so forth, they're going to do it under the wraps of unknown destinations. So I don't want to agree with you. I would like to believe that 2 million, or I'm sorry, 25 million metric tons is going to happen. I'd like to believe 17 billion in U.S. agricultural and ag-related products is going to happen. But I don't know if we can take that for proof anymore. And that might be part of the reason why the funds have been running for the doors here the last couple of weeks.
Helen Dearden, you have been listening to this conversation. I know you have some thoughts on it. What are you thinking at this point?
My head is exploding. You
Matt's lucky he's across the pond. He can't everybody chase him down. So
yeah, this is true. No, it's just that we need to keep in mind that there's a huge pool of all these grains and oil seeds out there, and buyers just go to whoever's got the best deal at the time that they need them for the slot that they want. And to Matt's comment of Egypt liking U.S. beans because of the quality, I think that the ace in the hole for the U.S. in the export market is whenever high quality beans are needed, they may come to the U.S., but otherwise, they'll look for whoever's got the best deal. And certainly Argentina and Brazil have the best deals right now on corn and probably on beans as well.
South America, well, Brazil in particular, wins on quality. And I'm not sure quality is the right word. American soybeans win on storability. It kind of depends on what you're using and what facility that you're using to crush the beans, which one is preferred. But if you're talking about something to go into storage for China in particular, that's the American soybean. Something to be crushed immediately, well, your meal oil content or your protein content, oil content, Brazil usually has the edge on us there.
Which is why China has been buying so actively out of Brazil, because crushers need the beans for immediate crush or for short-term storage. Yep, you're right. And now that China has their reserves full again of beans, there's not a big reason to come to the U.S.
Unless it's political.
Matt, speaking of political, we wanted to talk about fertilizer. How many ships are laden with fertilizer and stuck in the Persian Gulf?
Yeah, so it's been on the downslope. So we've got, according to our terminal, current data, live data, we've got around 37 vessels which are laden with fertilizer products. So that is could be urea, but of course would be sulfur, so a feedstock of phosphorus fertilizer. Which all in all, 37 vessels. We're looking at a deadweight tonnage around 2 million tons, give or take a little bit here and there. So we've got a lot bottled up in the Middle East Gulf at the moment. It is a bit on the downslope though. It peaked in May. We had, since the conflict broke out on 28th of February, we had a quite steep increase in the number of vessels. We peaked at around sort of 50 vessels there, and then since sort of mid-May we've gone down. So we're around the levels that we saw mid-March, still historically high. If we look at where we would be this time last year, this time last 5 years, we would usually maybe have only like sort of 5 to 10 vessels that are laden with fertilizer. Typically these are because they've just loaded and they're about to leave the strait. Whereas now we've got 37 that are sat there just off the western coast of the UAE. So they're just sort of on the edge there. They're ready to kind of go as soon as they can kind of get the all clear. But at the moment they're kind of bottled there. So 37 vessels is a serious volume of fertilizer there. And when we compare it to historicals, it's very high. And I think one of the angles one could argue is that, obviously, typically the fertilizer products are from the GCC countries. So, Saudi Arabia obviously has access via the Red Sea. And also the UAE has access, where they can kind of bypass the exports via the Strait, and the UAE has access on the eastern coast there. But the logistical, efforts that are required to move this kind of volume of fertilizer across to these kind of ports is not necessarily of priority to these countries. They're focused on other commodities. And while we had seen a slight uptick of fertilizer exports via these ports in April, that trend hasn't really strengthened much in May. So we're, these kind of key export origins are still struggling to find ways to move this volume. So it's interesting that if we look at the volume, the number of vessels we've seen move out of June, it's less than 10. And we compare that to kind of historicals, it's a much larger number. And despite seeing a sort of a slowdown of the number of vessels exit the Strait of Hormuz carrying fertilizer products, it's interesting now that we are seeing that softening. We haven't seen a strong uptick in the number of fertilizer-laden vessels move out of the Strait, but we have seen a little bit of a softening in the fertilizer market from where we were in the likes of sort of March and April, which is an interesting kind of watch point as it stands at the moment.
Am I to understand 37 are laden and setting, 10 exited?
10 have exited. Yeah. So they're still. So we've got 37 in the Middle East Gulf at the moment. But so this time, so before we got into June, so but at the end of May, we had 47 vessels. So we've had 10 that have since exited, but the other sort of 37 are still just almost anchored in the Middle East Gulf waiting. So as we move sort of into March and into April, there were a number of ballast or empty vessels that picked up and loaded with fertilizer products in kind of optimism and hope that the conflict that we're seeing in the Middle East would die down, and then we'd see a revival of trade through. But ultimately, what happened is these vessels were laden with fertilizer products, and they've since been kind of stuck or bottled within the Middle East Gulf. So since sort of mid-May, we've only seen a sort of a steady decline of the number of vessels laden with fertilizer products, just because one or two trickle through using either sort of that northern route via the Iranian the Iranian coastline there, or through what we call sort of a dark route where they turn off their AIS signal. So that's the location of the ship, similar to sort of GPS. That's on land. The AIS is the ship's location. So it's called a dark signal where before crossing the strait, they'll turn that signal off. So we can't see exactly what route it took, but we see it when it turned its AIS signal back on, and we can see that it's crossed the strait there.
Continuing on with the logistics, and I think you and I had this conversation before as well, there is a point at which even if the ship moves, the destination, by the time it gets to the destination, it'll be too late for the crop year. And so I'm wondering for Brazil, for India, for the places that these might be headed, when do those dates kind of come and go?
There would be a lot to unpack in that question. But for these kind of countries, I think the initial shock here is that for those kind of major exporters, we have seen for those major sort of fertilizer importers, we did see a good amount of coverage ahead of the higher prices that we've seen. So for us, at the moment, we're expecting almost a laggard effect. If fertilizer prices stay as high as they are, we might not see as strong of an impact on production in the 26-27 marketing year, but it'd be more the 27-28 marketing year where we could see even stronger impacts. If we can't see this release of fertilizer-laden vessels within the Middle East Gulf, and we continue to see other major fertilizer exporters like Russia, like China, sort of reduce their own exports of fertilizer products due to the global tightness, we would expect to see a stronger impact on not the upcoming marketing year, but the one after that, just due to the supply constraints at the moment.
Let's turn our attention to some final words from each of you now. Ellen Dearden from Ag Review in Morton, Illinois. What are your final words for the day?
Just keep watching the money flow, because that's really what's been driving this market, where the commodities market is all about being an investment for something that's not stocks and it's not bonds. So keep that in mind, that when money comes into this market, it moves.
Ted Seifried from Zaner Ag Hedge, your final thoughts for the day?
Yeah, no, Ellen hit it on the head. It is money flow right now, right? I mean, as I had mentioned earlier, I think the funds had gotten long for the wrong reasons. The question now is going to be, will the funds get long for the right reasons, whether it be weather or China does finally start to step in and buy that $17 billion in U.S. ags and ag-related products.
And Matt Darragh out of Birmingham in Britain, your final words.
Yeah, would echo same thoughts as Ellen and Ted. I think for us, we're keeping quite a close eye on those U.S. export sales, be it flash sales or the weekly export sales. I think if we do see any sign, labeled Chinese purchases of U.S. agricultural commodities, that could get things turning pretty fast.
Commodity Week, of course, is the production of Illinois Public Media. It is public radio for the farming world. You may listen to the whole of the program anytime you'd like on our website at willag.org, willag.org, or search Commodity Week out by name in your favorite podcast applications. Our thanks go to our panelists today, including Matt Darragh of Kipler, Ellen Dearden from Ag Review, and Ted Seifried of Zaner Ag Hedge. I'm University of Illinois Extension's Todd Gleason.